All right, ladies and gentlemen, hello. This is me, Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Friday. Well, talk about a Friday the 13th, right? And an interesting one that we're getting. Look, it's probably no secret, that what's happening in the world is kind of really annoying, and basically, at the moment, in general, it's annoying and it's tragic. It's probably the word tragic should come before annoying. And yes, the current recent attacks of Israel on Iran is shaking up the market in not a very good way. So it's putting the market into this risk-off environment. And well, if we were thinking that we're going to get a quiet maybe Friday, well, you don't think about that. It's going to be an interesting one in my opinion. I'm recording this video before the U.S. market opens, so it will be even more interesting when the U.S. market opens up and what kind of statements we will be getting from the U.S. Now, look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So, yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So, yeah. Oh, by the way, also just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, ladies and gentlemen, let's have a look at what's happening in the markets and what kind of reaction are we getting so far. So I'm looking at the cash indices here, the US, the US 30, which is the Dow Jones Industrial Average, the S&P 500, and the Nasdaq 100. So we saw the initial reaction to the downside, and look, I previously talked about this idea of a breakout here through this 42,850 zone on the cash index. And I said to you that, look, if we can clear this, if we can stay above this, it's opening the door to some higher levels, because again, maybe if we're forming a nice little inverted head and shoulders pattern with the neckline being exactly here. So, well, the neckline got violated a few times, but we kind of failed to stay above it. Or should I say, we had a moment we stayed above it, but then, yeah, this happened. On the weekly chart, you can see it clearly. You can see that this is, like I said, this is what's happening right now. So, unless unless the somehow they manage to find diplomacy, then yes, then I'm seeing something positive. But at the moment, to be honest, it's very difficult to maintain that positivity, because in a way, what Israel did is kind of yeah, it's not really going to go well with Iran, and at the moment. Prepare. Let's put it this way: prepare to pay more at the at the fuel pump, at the gas station. So yeah, unfortunately. Anyway, so coming back to this situation right now. So what we could be seeing here now, certainly, like I said, if the diplomacy prevails, then we could see a nice push back up here, and equities could pick up. So basically, for those bulls, it would be a celebration moment, because they would just buy it at the dip here and travel higher, and kind of keep it up until we go higher. But let's not rush into things, because for example, the S&P 500 also, it was very close to hitting the all-time high, but then this happened, and Nasdaq was even closer to the all-time highs, but then, like I said, this happened. So at the moment, I think that we will be, and we're entering a little bit of a choppy moment, a choppy session. Not only today's session, but also, like, I'm talking about choppy sessions, plural. And in general, I think that what they're going to try to do is to kind of keep it calm and come out with statements that they're working on, talks, they're blah, 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 this and that. And basically, this way, they can drag it up until the weekend. So then during the weekend, maybe they're not going to agree on something. And this is where, the market could kind of rally, or or actually fall off the cliff. So if they're not going to agree, there's going to fall off the cliff probably. But if they will agree, then we could see, like, a nice gapping moment to the upside on Monday. But again, At the moment, I think that this is what they don't want to do. They don't want to really mess up the market today. But again, anything can happen. Maybe they do want that. But like I said, at this point, I think that investors and traders and investors should be on the careful side, because again, this could be very choppy. We could be seeing market reaction to every little statement made. So just like I said, if you have, if you're trading, then of course have your stop losses in place, because like I said, this could be getting out of hand very quickly. Now, like I said, for me at this point, it's like already not even Friday that's interesting. It's Monday that's going to be quite interesting, and like I said, what's going to happen over the weekend. Now, look, the U.S. dollar so far has been drifting lower, and from the technical perspective, it continues to drift lower. It still is on a decline. It still remains below this downside line taken from the highest point of February of this year. So yes, there could be more downside. So purely from the technical perspective, yes, it's a bearish trend. Yes, we could drift lower unless the market decides to find good support around this area right here, and this is kind of enough for it, right? So if this has been a very good area of support, and so far we can see that, then maybe we could see a reversal back up. But for that, we need to see a push at least above that downside line, and we need to see basically a break of it. If we can get that move, and if we can get also a push somewhere above this territory right here, the 99.34 zone ish, then yes, I'm gonna get a little bit more excited with the upside. However, my preference is still on a move above the 100.40 zone. I talked about this in my previous videos, so yes, I'm watching this very carefully. Look, this whole situation with the Middle East tensions and everything, of course, it's having its bad moment on the Federal Reserve. In a way, I will explain. So, on one hand, if this continues to escalate, then we could see indices kind of falling off the cliff. We could see those drifting lower, and this is where the White House could come in and say, "Hey guys, look, we need your help. You need to do those cuts that we were asking you to do." A few like a month ago, like recently. So yeah, you need to step in. So this is where the point, where the Fed will have to kind of do something, maybe do something about it. But for now, the 18th of June interest rate decision, which is next week, currently we're expecting a no cut, no nothing action from the Federal Reserve. But I think that the press conference would be interesting. I think that's what everybody needs to keep an eye on. Look, by the end of this year, we're expecting two cuts, right? However, before this escalation, before this kind of Israeli attack, I was kind of very, let's say, skeptical about even having those two cuts. But again, we'll see how it plays out. Of course, if the market starts, let's say, selling off very quickly, maybe the Federal Reserve will have to come in and support the stock market. But then the other problem arises, and the other problem is the inflation. Because look, this week we got the U.S. CPIs. Those came out here on somewhat on a flat side, I would say. Higher. Okay, the headline was higher than the previous. It didn't meet the forecast, but it was higher than the previous at 2.4. It came out, and the previous was 2.3. So the core inflation came out at 2.8, the same as previous. So in a way, we're seeing that the CPIs are not really moving lower, and this is the headline year-on-year CPI figure chart. So you can see that we are still kind of flat right now. So we have slowed down. We slowed down the downside momentum. So if it would be just pure technical analysis on this chart, I would say this is looking to me quite bullish. Why? Because I said it before, and I'll say it again, that whenever I see, let's say, a strong decline first and then a gradual decline, I tend to see this popping, the chart popping kind of higher, showing the move to the upside. So again, but it's a little bit of a totally different thing. However, something to keep in mind. So if inflation does start picking up, and it could, if we see it could pick up, it could start pushing higher if we see this continuing in the upwards direction, as market analysts, other market analysts are right now, forecasting. Somebody's already forecasting $150 per barrel. But okay, let's not get too excited. Okay, you know, but look, for now, I keep on saying that this right now, yes, if we continue seeing escalation, and over the weekend, for example, something more harsh happens, look, Monday we could see a gap up here, and prepare yourselves to pay more at the gas station, at the fuel pump. So yeah, something that we are not very happy about, and well, but nobody asks us what we are happy about, right? In general. Anyway, so look, for now, I would say this way: if oil continues to rally, expect June inflation report, which is going to come out in July. Expect that one to be on the higher side. So basically, this number here, 2.4, that was the current number, and this curve here, which is kind of slowed down its decline. So we could, in a way, expect this one actually to push back up here. So we could see this one curving nicely to the upside. Look, again, this is just an idea, and there's a lot of ifs in all this, but certainly this is becoming a very interesting moment that we're going through. Of course, as you probably have been hearing about talks on probably on TV or somewhere else, talks about stagflation, where you have an increase of we have increased inflation, you have increased unemployment, and then and a lower economic growth moment. So in a way, a conflict kind of creates something like that. So we could see issues, we could see trade disruptions. That's why be very careful. Be very careful with which, if you're trading stocks, or if you're investing stocks, which stocks you're investing in. Be careful with that. And like I said, at the moment we're seeing, oil pushing higher. This, of course, could be an issue later on for China. That's why we see copper on a decline. Now, copper is used in many electronic devices, as you know. In general, not only electronic devices, in general, infrastructure, building infrastructure, where electricity is required. So, and you're seeing copper now drifting lower. So, in a way, China is one of the biggest consumers of copper, for obvious reasons, and you're seeing a decline here. So that means you're expecting a slowdown, in a way, in the Chinese economy. And if that's the case, then this could be because of higher oil prices, because it's no longer affordable. Maybe because demand is slowing down, because it's becoming for other markets which buy a lot of stuff from China, China is becoming less attractive, because again, it's you have your money, and then now you need to pay more for fuel. You're probably gonna slow down on your shopping in Temu, or Shane, or so. No, not an advertisement there, but just in general, that you see my point. And that's why, for now, everybody's in this little limbo moment. And of course, gold bulls are really enjoying the moment, and this so far is acting as a good kind of technical setup here. I talked about this. I said that, look, after we broke the upper side of the falling channel, I said that we're going to go higher. Then we had a slowdown here, we drifted back down, but then I said whenever we break, let's say, a trend line, we tend to revisit it from the other side. Perfect. This is just a textbook scenario. Boom, rebound, push higher, and then I said my next target is going to be somewhere around the 3,430 zone. Amazing. This is a very strong area of resistance. If we clear this, of course, the next pit stop could be the psychological 3,500 zone, which is the current all-time high. And you heard me correct. Pit stop, because I think that this could continue escalating, could continue rallying. So yeah, it's a little bit of an issue. Now, Long story short, ladies and gentlemen, for now, I would say this way: be careful. Put your uh, risk caps on, because at the moment we're in risk-off environment. We're seeing such currencies like Japanese yen and Swiss franc kind of taking the higher, taking the higher position. At the moment, we're seeing like some market stabilization, but again, like I said, we're waiting for the U.S. to open up and to see how we're going to close Friday. And of course, it's going to be a very interesting weekend that we're going to be heading into. And yeah, be careful. So if you're worried about next week and you have positions open, I would say just protect yourself in a way. You know yourselves better what you're doing, but yeah, just if necessary, better close everything and just kind of wait for next week. And look, maybe it will go your way, maybe it won't go your way, but we don't know that. So that's why I rather be safe than sorry. So again, like I said, you do what you know better. But I'm just saying that it's an interesting moment which we need to be very careful about, because it's at the moment, like I said, I have to be like I said, be honest here, because it's a tricky situation. Yes, tariff wars is one thing, but this is slightly different game. Anyway, ladies and gentlemen, I hope you found it useful. Thank you very much for watching and listening. I really appreciate your time. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you next time. Bye for now.